Chris, as I described before, serial entrepreneur turned angel investor. What inspired you to start investing in other people's ventures?
I think I should first of all say that it's nice to hear a VC say that he's now struggling. And years of probably telling entrepreneurs to go out and just do it and execute and grow. It's actually nice to hear, Mike.
What's the German expression? Was it Schadenfreude? Or?
That's right. To get into angel investing, I think I see a lot of, we work with Get Price in my business. It's an online shopping comparison business. And in that business we work with sort of close to 1,000 clients. And we see a lot of different levels of business, a lot of them terrible, a lot of them pretty good. And I suppose with working with lots of business like that, we start to identify patterns around what works and what doesn't. And having done that overseas, in Europe and back in Australia, I think at some point you start to think that you could help other businesses achieve what you might have achieved. And it actually becomes easier as time goes on. So I guess myself and other colleagues have developed a bit of what we think is a bit of a recipe. And if you apply a bunch of fairly simple rules, then you can make success out of business. So it's really about spreading your reach through investing in other businesses, because you can only really operate in a couple at a time yourself.
We'll ask you a little bit later about the value of money and the value of knowledge and expertise as well too. But have you gone through the process of being on, once again, back to the other side of the table, raising money for your own venture?
Yes. Get Price was the first one. That was about 4 years ago. We raised money initially from seed investors, and that was through my personal network, friends, fools, and family, as people say. We then, after about a year of that, went and got a big investor on News Corp, who were about to buy the remainder of the business. Since then, we've put together another business in Melbourne, which is still fairly fledgling, but we've raised seed capital for that business as well recently.
I'll ask you about that in a little bit as well too. Rob, let's take this conversation back a step, because we have started to mention some words like angel and some other things. As someone in the commercialisation space, could I ask you to give us a little bit of an overview of the various stages of angel, to private equity, venture capital investing?
You mean outline?
Outline the stages, the different types.
Well,
the options.
Various options. Well, I'm not going to get it complete, but let me give it a go.
Well, that's fine. I wouldn't dare.
So I would start, as Chris just mentioned, with friends, schools and family, but actually start a step before that, which is yourself. I was saying to James before that I'm a firm believer in entrepreneurialism being about passion more than anything else. If you're passionate about the business you're trying to build, then put your money where your passion is and dig into your super fund that you may have got from the job prior, or it doesn't matter if it's 10,000 or up to 100,000. It's an indicator that you believe in what you're doing, and that speaks volumes when you get down the track. Friends, fools and family, hopefully not so many fools, but friends and family wrote in. Then getting out, it will depend so much more on the scale and aspirations of your business as to whether or not you sit domestically or internationally, whether you are targeting a few high net worths beyond your immediate network of friends and family, or whether you're going into the full angel community before you even get to VCs. And venture capitalists, their name means venture, it's risk. They're the early stage investors. Then if you're going to be a serious $100 million or $1 billion business, you may be getting into more sophisticated investors who are looking for a formal relationship, and they're likely to get into what's called a Series B or Series C type investment round. So there's kind of a gamut of people that you can reach on, lean on, from something itself at the small end, as I say, the 10K to 100K style, right up to the mega millions.
What's most relevant to you in the context of an organisation like NICTA when you're commercialising NICTA technologies?
Well, that's an interesting question, because NICTA works with, and just to back up a bit, NICTA is an organisation that's been created, largely federally government funded, to crack some really hard, important problems for Australia by inventing new IT and communications. So we're focused on IT and communications, entrepreneurialism. Hard word to say it.
Entrepreneurialism?
Yeah, that one. Yeah, sorry. We work with some of the leading researchers and scientists from around the country. These guys are brilliant, but their level of passion to dig into their own problems to support the businesses is limited. So the areas that they work on range from relatively small businesses, and by small I mean something that might get to maybe a run rate of 30 million a year revenue, through to seriously game-changing plays that would be $1 billion a year market opportunity. Those kinds of businesses lend themselves to different levels of investment. So if you're looking for $40 million to get a big business up and running, you need to go global, and you need to be starting with lots of conversations, and you certainly don't wait until you've got all your horses lined up before you go and have the first conversation with the VC. It's about building relationships all the way along.
Your experiences would therefore be quite different, I'd imagine, to Chris's. But Ilkka's been very patient at the end there. The most difficult Spice Girl of all, because I had trouble pigeonholing you. It's a bit like, was it Ginger Spice? Because she was difficult to pigeonhole because she was supposed to be the one that got around. Is that you, Ilkka? Do you get around? We had an interesting conversation because your background is it's a very rich and diverse one. It's interesting that Rob just mentioned the role of revenue. Now you've raised money, you've invested as an angel, you've gone out, you've rolled up companies, you've bought companies. How important is this? How important is revenue in the capital raising equation?